All right, it's uncanny, right? Stocks up as soon as oil moves up. That's what's happening right now. Who knows this weird connection better than the commodities guy on the planetary, Duffy, the CME Group Executive Chairman and President. Terry, very good to have you.
Thanks, Neil. Appreciate it.
When does this all de-link? Because, boy, this phenomenon has been the case for a while now.
You know, Neil, I think it's really the de-linking is going to be together for a while, because when you look at what's going on geopolitically, we have election season going on, we have numbers, you know, growth is anemic, you got interest rates potentially going to negative interest rates, and the market's looking for something to trade with, and it found a partner. It found a partner in oil. And when oil, you know, traded down significantly, you know, the market started to eventually with the new year followed it. And now the whole story is oil, because you look at the global oil stocks that are traded today, there's roughly 350 different companies with a market cap of $2.5 trillion. And then the S&P 500 is made up of 11% of energy stocks. That's become the new story. So the market goes up and down based on the oil.
Those traders, you know, obviously they're drawn to oil. They find a gazillion different ways to trade it, leverage it, hedge it, arbitrage, what have you. But too much so? Do you think it's just made it too volatile as a result?
Well, I don't think it's made too volatile. I mean, you know, when the market goes up to historic levels, when it went to $1.30 a barrel, you know, we had everybody in Congress saying the speculators are driving the price up.
Yeah.
Now the oil goes to $26 a barrel, and now we're the people saying the speculators drove it down, which put more money in the consumer's pocket because they're not paying as much at the gas pump.
No, you're right about that. They only look into it when it goes up and all. But do you fear that there is this notion that traders are gunning the system in both directions, and someone's going to get burnt here?
No, absolutely not, Neil. And you look at the exploration of the shales here in the United States. They were producing oil. We were on pace to produce 18 million barrels a day by 2018 at $80 a barrel. And then, as I said to you on your show before, as the market went down, technology got better, and then the Arab countries who produce nothing but oil and have nothing else saw this phenomenon coming on, and there was no way they could let it happen. They hammered the market, and they took it down. It wasn't traders. It was the producers of the product throughout the world.
Real quickly, Saudi Arabia is not going to be cutting production, so obviously it doesn't mind slitting its own throat as long as it can slit some others. But what do you make of that?
Well, I make of it that what else are they going to sell, Neil? I mean, when you look at over there, their exports are oil only. When you have a country like ours that's so diverse in the food industry and so many other products, and other nations around the world, they can sell other things. In Saudi Arabia, they're selling oil, and that's it. So they need to keep their people happy, so they're going to continue to sell the price down and not let us become energy independent. Even at these prices, Neil, we're going to produce 14 million barrels a day by 2021, according to the government standards here that they've put forth.
That is very well put. Very good perspective.
Yeah.
Terry, thank you very, very much on this crazy news day. We appreciate it.